Hey everyone, Zach Silverman here. Hope everyone's doing really well. It's June 6th and we have finally got our first rate cut yesterday. The Bank of Canada has decreased the overnight rate, which brings prime rate in Canada down by 1/4% from 7.2 to 6.95%. This is of course great news for those people in variables and lines of credit. But also, as I'll explain, it's also great news for people that are looking for fixed mortgages getting into the market, looking to refinance, up for renewal, etc. So we priced in about, the market priced in about an 80% chance of this rate cut happening, so we're very glad it did. Moving forward, it's going to be very, very data dependent. I wouldn't be surprised to see another rate cut. I don't think it will be next month, but I think maybe in the summer in July. And so this is really great news for people in mortgages or people looking to get into the market. We've got a massive amount of renewals coming due, as I'm sure lots of you have them coming due either this year or next year and into 2026. People in very low interest rates that got their mortgages during COVID, who are in at around 2%, some lower than 2%. But really great news because, of course, it's a real shock to renew into a significantly higher interest rate. So with variables, people in variables or lines of credit, they'll see that interest rate deduction very soon, in the next, either today or in the next couple of days. And what that does to your mortgage is, for example, for a $500,000 mortgage in Canada, the interest cost deduction for that 1/4 point is about just a little over $100, call it $102. And so depending on what product you're in, what lender you're with, your mortgage payment will come down depending, or if you're with a lender such as TD or most of the big six lenders in Canada, where the variable, just your interest goes up or down, you'll see that interest cost come down. You won't see your payment change like it didn't change when it went up. So that's great news, really great news. I do see again rates coming down for the remainder of the year. I don't think we're going to see them coming down even to where they were before COVID, but they could settle down for sure over the next couple of years. Variables in that high threes, maybe low mid fours, which would be very nice for the market here in Canada. So when we talk about fixed rates as well, with the announcement yesterday, we've seen a decrease in the 5-year bond yield in Canada of about 40 basis points, which is a significant amount. As long as that doesn't jump back up, which I don't see it doing in the short term, we should see fixed rates also come down in the coming days. So later this week, we've only got tomorrow left of this week, and then into next week, we should start to see some interest rates come down. 5-year fixed money, which I don't recommend at this time where the market's at, should be in the mid fours type thing, which is mid to high fours, which is really great. They've been into the sixes for a while. And so the other thing when we're talking strategy for those getting into the market, we're looking at renewals, refinances, debt consolidations, is now variable is a very compelling strategy again. With them coming down, with the spread between fixed and variable tightening a little bit, I love the idea of staying agile and being able to convert to a fixed as they come down if you want, or ride out the variable as it comes back down. I know lots of you have been taken kind of a bit of a beating with the variable over the last couple of years with it going up and up and up, so you may be gun shy, but there's no right strategy overall, whatever's best for your needs, and we're certainly happy to have those conversations. So great news. It's a sunny day here in Vancouver anyways, and really looking forward to chatting with some of you guys and building up some of these strategies. Thanks so much. Chat with you soon.